Ladies and gentlemen, quite a day today in this June 26th. Take a look at this Fibonacci resistance we've been dealing with for the last hour. Look at that. Buyers remain fully in charge, but buying into this Fibonacci resistance is such a bad idea. Previous trade was drastically lower. This trade is so much higher. This resistance is a problem. Market in massive correction, dancing back and forth. Buyers remain fully in charge. So if you missed the previous trade, I highly encourage you, pretty please review. And pretty please remember, bright pink line is the most important line in the market. Bright pink line is the end of the minor trend. This is where institutions stepped in from yesterday. This is where a knowledgeable trader buys the market. Right now, this is a problem. This is little junky chart on S&P, 1 minute chart. Knowledgeable trader knows the importance of powerful pullback from this level. Knowledgeable trader knows buying at key support, not into resistance, is crucial. Take a look. Exact same problem across the board on any instrument you trade. Apple Weekly. Ultimate dance from key Fibonacci support to key Fibonacci resistance. 6 months war zone. Identical level. Amazon Weekly. Amazon danced at this level for months. This is your investment decisions. Do you want to hold stocks? Do you want to trade options? Why not? Choice is yours. Bank of America, this dance between these two levels for entire year. What is this? This is oil on May 16th. 5 minute chart. Identical level. What you choose to trade, absolutely up to you. McDonald's, my goodness, exact same level. Euro been reporting this support for many months. Never ever short into. This been the channel on Euro. Identical level across the board. Never forget and never ignore. And this is where S&P skyrocketed to after breaking through decision point 1 on weekly. This is S&P right now on little junky chart in front of you, as we've been babysitting this market for an hour. Knowledgeable trader knows that this is what your trading starts from. Basic rules. Buy at support, not into resistance. Buyers remain fully in charge, market frozen in correction, dancing back and forth. This is what your success starts in trading from. When you separate corrections from reversals, when you're not buying into Fibonacci resistance, when you're trading from Fibonacci levels, never into them. This been ultimate test time and time again, no matter what you trade. Nothing less, nothing more. Time and time again. What you choose to trade, absolutely up to you. Do you remember Euro in 2014, 2015? Do you remember this support? Do you remember where Euro is today? Identical level. This is where Euro is now. Skyrocketed to 125 and collapse finally through this support end of minor trend after trying for a level. You learn these levels, you apply these levels on any instrument you choose to trade, any platform you choose to trade. Choice is yours. So if you have any questions about the method, pretty please come to the website and watch the webinar on the About Us page, which explains all about the method. And if you would like to learn the method, simply click on the Learn, the best time of the year to join by far. Fibonacci Trading Boot Camp, July 9th through 20th. You learn the levels, you learn the strategies, and you decide what you want to apply them to. No software of any kind. Your knowledge, pure price and Fibonacci. Bootcamp included in the mastery course fee. If you sign up for private mentoring or group course, it includes bootcamp at no cost for new students. So please review all the information on the website, as we will be mastering proprietary Fibonacci strategies in live trading environment. Group course 8 weeks, private mentoring 16 includes bootcamp. Pretty please listen to audio testimonies on the website. Listen to the students and never hesitate to contact me. And again, if you would like to understand more about the method, pretty please review everything under About Us and view the webinar. Thank you, traders. Thank you so much for your time today. Let's see what S&P will do next. As this brick wall reminding you, only Fibonacci will keep you out of trouble. Buyers remain fully in charge. Do you remember what I said since early this morning? Price is heading here. But first things are first. This level is a key. As price moving from smaller charts to larger time frames, time and time again. And this is ultimate brick wall that's been here for the last hour. This level is out, market will start moving higher. So this is the very first time students considering touching the market. Students did not touch the junk. Students did not participate in pain and torture. Are you seeing the difference between prior correction and market now? Absolutely no surprise. Market is moving as expected. Knowledgeable trader never participated in this junk. This brick wall remains. However, market became drastically more powerful. Very big difference between this junk and fluff, no trade, versus this. Are you surprised? Should not be. That's the power of knowledge. That's what knowledgeable trader does. Trades based on the rules. Long-term hand holding will never work. Knowledge will. And that's the key in the course. And that's the power of knowledge. And again, if price will give you time and time again exact same formula, what would knowledgeable trader do? Not wait for hand holding outside of trading room hours. Take advantage of the market. Market open 24/7, as Pablo does in Barcelona, as Johan does in Colombia, as Anna does in Colorado. Every single trader, different market, different account size, trading 24/7 all over the world. And that's what played out this morning. Every day, every time, the same formula. No institutional support is present today. None during trading room hours. This been a problem for a long time. Time and time again. No matter what you trade, formula remains the same. Risk management is the only difference. While we're waiting on S&P to skyrocket, remember, drastically different price action structure, drastically more powerful market than the fluff we dealt with for the previous hour. As we discussed, this is the only time knowledgeable trader would choose to touch the market. While we're waiting on S&P, here's a question about J&J. My goodness, this is investment positions. If you know where Fibonacci levels are, would you still be long J&J? Or would you take profits off the table? You want to trade S&P little charts? Or you want to invest J&J? If there is a reason why J&J finding buyers, let's take a look where J&J now, shall we? So here's where J&J is now. If you know the rules, you know what to do with your position. J&J is doing exact same thing as S&P. Rules are met, take a trade. Key moment on S&P. As we're speaking with students, Pablo in this trade. If beginner trader can do it, what is stopping you? As we discussed, this remains an obstacle. Key moment on S&P. So again, while we're waiting on S&P, we're looking on oil, we're looking across the board. This is key support in oil, and this is why oil skyrocketed from this level. So let's take a look where oil is now, and let's take a look what to expect next. This is where oil is now. This is where a knowledgeable trader right now taking profits off the table and moving his stop outside of break even. Everyone seeing that? Prior oil could not break through key Fibonacci resistance. This time around, trend is spectacular. This level is out. Not the place to buy oil into. And that's what you learn in the course. Clear on that? So ladies and gentlemen, thank you so much for your time. Have a joy-filled afternoon. Look forward to seeing you tomorrow for oil news. Alphys, let's recap the day.